Last time I spoke to you about Australian inflation and its effect on what the RBA might do in its November meeting. I said that expectations for inflation for the year to September, which would be published in October, were between 2.5% and 2.7%. And I said that if rates came in at the lower estimate of 2.5%, then we could have a rate cut in November. Well, the numbers are out, and very sadly, we're not only not going to have a rate cut in November, we're not going to have another rate cut anytime soon. And I think it's fair to say that we may be at the very end of the rate cutting cycle in Australia. And the reason is that the core measure of the trimmed mean, which is the core measure of the CPI, which was published for the year to September, was not 2.5%, it was not 2.6%, it was not 2.7%, but it was a shockingly high 3%. That came about because in the previous quarter, prices went up in terms of the trim mean by 1 full percentage point, or as the Americans say, 4% annualised. So that was a shock that no one anticipated. If we looked at what else happened in prices in that quarterly CPI, we see that housing prices were rising at a rate of 4.7%. Health prices were rising at 4.2%, and education was rising at an annual rate of 5.3%. But what the ABS told us is that the major source of inflation was the jump in goods inflation, which was up 3%, up by 1.1% from the previous quarter, or as the Americans say, 4.4% annualised. And this was mainly due to an enormous leap of 23.6% in year-on-year prices for electricity. While automotive fuel had less than actually fell by 1.6%, and annual services inflation was 3.5%. Now, the reason that they provided for this enormously unexpected rise in inflation was electricity prices. And really, when we look at this, we'll see it's not electricity prices per se, but it's the end of federal government funding to the individual states to keep electricity prices low. So electricity price series, as published by the ABS, rose 23.6% over the 12 months. The annual rise in electricity costs is primarily due to state government rebates being used up by households. Now, these are state government rebates which were provided under the ERBF fund by the Commonwealth to the individual states to keep their electricity prices low. So it was Commonwealth funding to keep electricity prices low, dare we say, ahead of the last election. And now that we've passed that election, they've suddenly run out of money for that funding, and electricity prices are accelerating. So those state electricity rebates included a Queensland $1,000 rebate, a West Australia $400 rebate, and Tasmania's $250 rebate, and all of these rebates have been used up. We can see the effect of this on a slide that's published by the ABS. And what it shows is the level of electricity, excluding government electricity rebates, and we can see the little parts of the EBRF funding, which is the federal government funding, and when they kick in. So what we see is how electricity really took off in 2023, and it rose by almost 20%. and that might have been a bad thing in terms of the retail perception of the federal government. So the federal government provided funding to state governments to knock those electricity prices down, and there'd been a number of schemes. There was the scheme in 2023. There was a scheme in 2024, and the result of that is, in comparison to the unsubsidised price of between 115 and 120% of the original starting price of 100 back in 2023, the actual price paid by the consumer ahead of the election was 80%. That is to say, it was well below the price that it was actually costing the states to generate that electricity. But since December 2024, those subsidies have been reduced, and over the last year what we can see is the lower line, which is still, by the way, below the unsubsidised cost, which is now up around about 122%, so about a quarter higher than where this whole process started back in 2023. So the result of that was to generate 3% core inflation. Now, if we'd had 2.5% core inflation as the result previously, then rates could have actually fallen from 3.6% to 3.35%. But if you actually look at what where interest rates should be at the level of with 3% core inflation, then they would actually have to go up by 25 basis. What we can see here is that we are definitely at the end of the rate cut cycle. Is the RBA likely to put up rates? Well, I think at the next meeting they might consider it, is that this is cost push inflation, not demand led inflation. And so increasing rates wouldn't have any effect on future inflation. It would just make the situation even worse than it is. So that very high inflation number that we've just had of 3% core inflation, as we come to the end of these federal government subsidies for electricity prices, mean that we have also come to the end of a series of Australian rate cuts.